Thank you, Sumita. Let me start by wishing Access a happy 20th. Wonderful show. Now, you asked me about the last decade, but I would take a minute to actually go back. Coming from the State Bank of India, I cannot resist saying this. Financial inclusion actually started, in my opinion, 1955 when the Imperial Bank was made the State Bank of India with a clear mandate that reach out to the unbanked masses and areas. Right? The second step, which I see watershed movement would be the nationalization. And if we see the growth of number of branches, banking branches, from then till now, I mean, it must be about 25, 30x. And of course, later, one point I would add from today's thing would be the 2004 when Access started. But then actually I would be going to 2005 as financial inclusion as we see it today. It's 2005 when the first village was chosen, if my recall goes right, Pondicherry, Union Territory. This was the village of Mangalam. Look at what sort of a beginning that was, Mangalam and Shubha Mangalam, I would say. From then on till now. After that, 2006 was Reserve Bank's entry, and then 2010 was I'm just sort of giving out. Then 2014 was one of the, again, major things that happened to FI, and that was the opening of the Jandan accounts. And today we see the number of accounts, I mean, incredible, right? Everyone seems to have got into this, and that's the incredible movement which we have seen. After that, the linkage to the JAM Trinity, and after that, the benefits that have accrued, DBT, and so many other aspects, insurance. That was Jandan, then it was Jan Bima. So much of good has happened in numbers as well as quality, I would say. Now, if we actually look at the challenges which we will need to look at, some of them are opportunities, of course. And major things would be like coming out of your introduction itself is that effective access to be given at an affordable cost. Right? These are two aspects, and the third is how do we actually bring more and more and look at 100% coverage, a saturation point. I think these are the challenges going forward. I stop here, then I'll get back again.
Thank you. Mr. Prakash Kumar, what would you feel are the next challenges? And I'll put a shorter time horizon for you for the next 5 years.
So let me also look back a little bit. Of course, as was being mentioned by a friend from State Bank of India, the financial inclusion per se started with as long as back as independence, when maybe 69 when the banks were nationalized, and then various poverty alleviation programs were put into place. But in the real sense, the inclusion was still elusive, and the SHG bank linkage program started in 90s to bring them in the fold of the banks, to open an account on a collective basis, inculcate the habit of savings and credit. But I would say that the real credit of disrupting this sector goes to the microfinance institutions. The way they brought in a market-led business model to actually cater to the last mile through a profitable kind of a structure where equity can come in, where investments can come in, where the innovations can come in, the technologies can come in. That could happen only because of the microfinance sector, the way it picked up from the Grameen model. And SIDBI is proud to be a part of this microfinance journey since beginning. Mr. Brij Mohan is sitting there. We call him the father of microfinance. He had a vision that, I was not a part of that movement at that point of time, but as SIDBI, I can speak that SIDBI had a vision that this outreach problem cannot be solved through mainstream banking channels. You need separate set of institutions who can actually deliver to that segment, and specialized institutions, and that's what we thought microfinance institutions will do. It started with NGOs, moved on to more regulated NBFC kind of a structure, then small finance bank, then banks, then private banks taking over MFIs and making them as a BC. So in 20 years, we have seen this whole journey happening. When the loans were given only by the NGOs, and SIDBI had a program of microcredit scheme wherein most of the MFIs who were from that kind of a vintage would have taken the first loan perhaps from SIDBI, including Bandhan. So this is how the whole thing has changed. Of course, the big push came through Jan Dhan Yojana, because 5-6 years back, still, despite all that journey of banking in the country, we used to talk about the accounts are not getting opened. So this there was a BSBD kind of a concept which started in 2011-12, it's not picking up. Then finally, when the Jan Dhan traction came, now we have almost everybody having an account. So even for making microfinance available, it's important that the banking penetration is there to that area. And this Jan Dhan account has actually helped in a big way. And today, as we all know, what started as a completely cash business, 100% of the disbursements are happening in the bank account. So it's a big way we have come forward. Going forward, as I see now, the microfinance is mainstreamed with almost all kinds of entity working in this area. There are NBFCs which are actually into microfinance. One of the biggest portfolios of microfinance, I guess, is from L&T Finance, which is bigger than many of the MFIs. There are small finance banks, there's a bank, and there are, of course, examples of IndusInd and Kotak taking over. So it's completely now pervaded. The microfinance is completely pervaded. The real financial inclusion in that sense has been achieved. So going forward, next 5 years, what will happen is anybody's guess. But my sense is most of the innovations in the space has been coming from the real pure play MFIs. They will have to continue to innovate, they will have to continue to show the way, and it will continue to keep on getting mainstream. But now the challenge for them is rising multifold, because now they have a competition. But the good part is, and I'm very happy to say, in the favor of the MFIs, that still I see many of the banks are charging more than the MFIs. When I go to the field and talk that what's this bank giving, what's that bank giving, what's your rate, they say our rate is the lowest, what we lend from our funds, as compared to a BC partnership or a co-lending partnership with the bank. So these are the things which is happening. So a lot of innovation will still happen. And of course, I always keep on asking this question that end of the day, last 20 years in microfinance, have you made a difference in the lives of the people, or you have just done business with them? You have made money from them and grown big, given good returns on equity to your investors, but have you made a difference in the lives of the people? At the end of that's the most important thing. And this is what SIDBI now has been pushing the MFI sector to start measuring the impact in a much more systematic manner, instead of just doing some stories here and there. A large-scale impact measurement, we are actually conducting a big study with Sadhan to document the best practices in this area. Also look at what more can be done, because this measuring of impact is important. And as our CMD also said, there are certain things which needs to be done. One is on the health insurance front, because we all know, the microfinance practitioners, we all know that one event can push the person back in the poverty. So there's an Ayushman Bharat scheme, but are we able to push our clients to avail those benefits? We are actually talking to NHA to see how microfinance institutions can come in that area. And finally, in terms of product innovation, we have been just having one product, you call it by whatever name, it's a term loan, which can be paid in 52 weeks or 100 weeks, or slightly more than that. There's no innovation in that sense that we still have not been able to give a revolving credit facility to the microfinance customer. But that's also in our agenda. With the help of UPI kind of a feature, we are talking to RBI. We have to convince RBI. We'll have to do a lot of convincing to do to RBI. But we want to ultimately give the microfinance beneficiaries a revolving feature. And whenever you talk to the microfinance customers about this kind of a facility, they're so excited that they'll be paying interest only on the amount which they've drawn. Whenever they have surplus, they can pay it back. So these kinds of innovations are happening. So I see that next 5 years, MFIs will continue to lead. The pure play MFIs will continue to lead in terms of innovations, in terms of technology. Yeah, let's see.
That's great. So the MFIs are changing. Krishna, how are the banks changing? So the question that I had actually for you is that whether banks and NBFCs, he answered a part of it, are proactively using in-house data to track which segments, like maybe women, for instance, where they are not using their accounts or to enhance the digital adoption for it.
First of all, good afternoon to everybody, and congratulations once again Access for the 20th edition. Let me start with saying that data, we've heard data a lot. I mean, morning session also we spoke about, we heard all kinds of data that is coming into play. Two important event that has happened. One is the Jandhan, which brought in 50 crore plus and adding 3 crore every year. That has given us a lot of data pull. Second important thing is the regulatory change that has happened with RBI coming up and changing the microfinance guidelines in March 22, which has enabled the data flow to bureau, which was not happening earlier. So the data flowing to bureau, and not just the woman borrower data, but the household data. So one is that data flow has started. Second, we also saw the first line of inclusion in terms of Jandhan, getting sort of ingrained. Now, we also heard the challenge, I think the TFS secretary spoke about it. He said there are so many inoperative accounts and there are no nominations available, right? So that's the next bit of challenge as to, yes, we've opened so many accounts. How do we make it operative? How do we get them to start using this account, not just in terms of getting the DBT benefit, but also the regular aspects. So I was traveling to one of those villages, Ban Basti. It's in Darbhanga in Bihar, and about close to, I would say, it's about 2,500 people, a population of 2,500 people. I spoke to about 15 ladies, 15 to 16 ladies, and one of them said is that I have an account, but I'm not using it. So the next question was, why not? She said, "Kaun jayega? Thode paise pade rehne do." So the real benefit of having that account is still not ingrained into her. So I feel the next step is bringing in that awareness, which we are doing in a large way as a industry. But also I think the digital literacy will play a large role today because she has to go to a branch, and which may be far from where she is today operating or where she is doing her business or whatever self-employed activity she's carrying out. So it becomes extremely important that how do you bring the convenience aspect, how do you bring the trust aspect, and once these two are built in, the usage is expected to go up. And that's where I think the next effort should be. We have a very cost-effective product that's available. It's all about getting the customer to believe that this is meant for good and this will enable them to get more credit once they build the behavior. So account aggregator is a great tech platform that we have, which will enable the flow, and cash flow-based lending will take off once the data starts moving in. And today, it's just not, I would say, it is just about tip of the iceberg as far as account aggregator movement is concerned. So there's enough and more around data that can be worked on. Regulatory framework is set right, and we have enough fintech, agri-tech, like we work with agri-tech and fintech very, very closely. That brings down a cost of distribution as well. So I think data is going to help a lot in terms of making access and also driving digital literacy in a big way.
Okay, great, thanks. So you're talking about increasing access to data, increasing data, as well as the need to develop trust in digital services, or even in basic banking for many people. So Pawan, I'll come to you. That this brings me to responsible finance. It's something that is a term that has emerged recently. Very often is what we're hearing about it. Can you? I thought you'd be the best person to break it down for us, right? For all the players in the ecosystem, what does it mean to be responsible for the industry, for the regulator, for the policymaker, for the customer, associations?
So you want to stay here for the rest of the afternoon?
Yes.
Talk about this? This is obviously a deep topic, and I think being responsible has its own connotation, but when you add finance to it, it kind of tries and elevates the whole position. So if you look at the journey of the customer from being onboarded, from the information being available to her and being onboarded and moving to at least servicing point, there are several stages where we need to be looking at what her needs are, what will work for her, what is the best way to address those needs, and the way that how you're communicating with them. If it's credit, are you telling them what the interest rates are, what the terms of conditions are very clearly. From there on, if you want to onto actually applying for a loan and getting it. And we know for sure that there are biases in the ecosystem where the women's applications are highly rejected. They are more vulnerable and they get rejected. To all this kind of, there are lots of elements inbuilt into the whole thing. I think it's about being fair access to the services that they need, to being able to look at their dignity and offer them the interaction with the ecosystem in a way that still maintains their dignity. Most people are scared to go to a bank branch because they were at that level I'm talking about at the bottom of the pyramid. They're scared of entering into a bank branch because they don't know how they'll be treated, right? Now that has to change. There is a role for all players in the ecosystem. But I think the key is, as a whole lot of folks have gone and said, that the digital rails can get blocked or have barriers if the customer protection is not in place, which I think is the biggest element of it all. And there needs to be a very straightforward way for people to register their grievances and timelines which help address this. As an example, we cannot have somebody who's going to use an ATM and the ATM, it doesn't have cash. It still says that your cash is being disbursed and she doesn't receive the money. It takes 48 hours for that to get resolved. Why should it be 48 hours to get resolved if it's all digital and online, right? That itself is responsible as well, right? So how your interactions of the ecosystem is going to impact the customer and the borrower is in play. And all the stakeholders need to be able to address that in a fair way so that we're not at any point of time only taking a supply side view of what needs to get done, but also the customer side view and what works for her the best. So I'm going to stop there.
Okay, thanks. So I think we seem to be at a stage where even the basics are still need to be in place in certain parts, and still we have some emerging risks which are coming. So Hemlata, I wanted to come to you, topic that we were talking about even at the panel out here is about climate. This is something that is just kind of on the radar for people, something which wasn't definitely there a few years ago. You have financial lives of the poor are being disrupted because of heat, because of floods, because of uncertain weather. Our whole monsoon is changing, all the patterns are changing. So how do you think the financial institutions are viewing this, and how should they be viewing this going ahead? It's going to get worse.
Sure, thank you. I think climate change is here to stay. Like we've seen, at least even in India, from 1900 to maybe 2018 or so, the temperature has increased by almost 7 degrees Celsius. This seems to be very small, but it's huge, and we are seeing the impact of this, as you mentioned, in our daily lives. I think it's expected that over the next 2 decades, if we continue in this current trajectory, we will see severe problems with access to clean water, hunger and famine, and as well as floods, and we are seeing all of that, even today. When you talk about floods and famines, you just cannot escape talking about what's happening in the Bay of Bengal. Over the last, I think over the last 70 years, the intensity of cyclones in the Bay of Bengal has increased 3 times. And that's really having an impact on daily lives. And we heard about this Yara cyclone, which displaced thousands and lakhs of people from their homes. And most recently, last week, Michwang, which impacted, Chennai. And it is a fact that this impacts poor far more than it impacts. It impacts everybody, it disturbs everybody, but I think livelihoods get destroyed, especially when you're the poor. And so coming to your question in terms of how do financial institutions, how can they address it? It's a range of things, Mr. Prakash spoke about microfinance starting inclusion. So I think microfinance has also been playing a small role, but a very key role in this by financing, the small solar appliances, lanterns, stoves. It has addressed climate change in a very small way, but also improved their quality of life, right? On the other end is the extreme, the large solar park, the large renewable energy projects. But what really needs to be addressed is what lies in between these two extremes of very micro and very large. And here, when we talk about what is in the mid-range, we look at two aspects. One is, I think, MSMEs. MSMEs are the growth engine for the country, but it's also known that 70% of industrial pollution is contributed by these MSMEs. And hence, what is really necessary is to be able to get these MSMEs to grow in a more sustainable fashion, right? They need a clear roadmap in terms of how they have to kind of convert to cleaner energy, how they have to convert to cleaner, greener equipment. They need to do conservation of heat, waste, water, resources. All of these things need to be happen. And banks and financial institutions need to finance this, right? This is a huge opportunity here. And I think two key things need to be done. One is clearly from the policy aspect, because there needs to be policy to be able to identify what is a clean or a green equipment, what is energy efficient. And here, I think a taxonomy is absolutely critical, and that's needed. So I think here the government or the central bank or some kind of an agency has to play the key role in coming out with an universally accepted taxonomy. I mean, from a policy perspective, the other thing that needs to be probably done is provide the right kind of incentives, maybe make climate or green as a part of the priority sector lending. Maybe you have reporting requirements on sustainable lending that the banks do. So I think these are incentive to push lenders, banks and financial institutions to lend to this segment, right? And once this policy initiatives are in place, I think financial institutions need two things. One is they need to understand, and they will see the commercial opportunity in front of them, and it's a huge business opportunity for them, right? But what's needed is capacity building for them to be able to assess the risk underlying in this segment. And I'm going to use one more other critical segment which impacts lives is really agriculture. So, we all know that climate change impacts agriculture directly, and 70% of the country still depends on agriculture, if not maybe 65, on agriculture for their livelihood. But the fact of the matter is also that we know that agriculture contributes to 30% of greenhouse gas emissions. So it is a two-way thing, and what's really important in the agri space is to adopt climate smart agriculture, right? Which basically talks about improving productivity, increasing resilience, and also reducing greenhouse gases through a range of things. So again, here I think taxonomy, a push by the financial institutions to insist that whatever agri-financing that they are doing is climate smart, will really help in the overall reduction of this. Thank you.
Thank you. So if I can come back to you, Mr. Prakash, because she's been talking about from the climate lens, but even if you're talking about, changing or giving aid to small businesses or MSMEs, since a large part of them are in the informal, in the sector, there is a mission on to accelerate their formalization, but the kind of initiatives that policy would have in place would be better targeted to people who are already in the system.
Not getting the exact question, some audio systems is not very effective. Just repeat the last part.
Okay, so I'm saying that the new risks that are emerging, and given the actual reality that a large part of our small businesses are informal, and there is a mission to accelerate the formalization. So how do you marry these things together?
So yeah, as was being discussed in the inaugural session also, if you look at the entire MSME space, the point which was being made is they have to deliver big if India has to achieve that 5 trillion number in terms of GDP soon. A huge amount of businesses which are at the bottom of the pyramid, they're still not getting funding. You look at the MSME as a whole, the estimates are that 25 lakh crore is the total outstanding loans. But the gap again, varied estimates. Different people have different estimates. The gap is at least 2 times. 50 lakh crore is the gap. So we are yet to, reach there in a big way. And unless we cover this gap, the idea of India becoming a developed economy and all that will remain to be a distant dream. Now, again, you break it up into 2 parts. One is the formal MSMEs and the informal MSMEs. Obviously, formal MSMEs take the big chunk of this loan, but lower in number. And there, more or less, the problem of providing credit, etc., has been resolved with the changes which are happening, the way data is being analyzed. The GST is one big difference, I feel, which has been made. I mean, other than what it gives benefit to the government in terms of transparencies, collections, and all that, it has made a huge difference to the banker. Perhaps the government also does not realize what difference it has made to the bankers the way they lend. Because you have on your fingertip the entire sales ledger of that entity, the entire purchase ledger of that entity, and the kind of analytics that you can run, and there are fintechs doing it. You can take solid credit decisions without any human intervention. So GST coupled with the bank statement, and of course ITR. I mean, the problem of lending to the formal segment of the MSME is more or less resolved. We are moving to a straight-through process kind of a regime. SIDBI has already launched an express loan scheme 6 months back, which is the STP kind of a loan. It just gets approved as soon as you complete the process. It started with the existing customer. Now we have moved to the new customer. It's a machine refinancing thing. It's working well, early stages. And the next big thing, the video was being played here, is GST Sahay, which is an Open-based platform, in which currently we have done a sandbox testing in RBI, and we have launched this scheme also on a pilot basis. Both your forward side as well as the backward side, you can get finance. So if you are in the network of ITC, for instance, distributor network, a retailer which is buying from ITC, you can get your funding. And if you are selling it to some entity, you can get that funding also purely based on invoice. It's a completely automated process. So there's no human intervention. You just go, give consent to pull your GST data, bank data through account aggregator. These are the challenges which are there. So account aggregated data is not coming in. Your bureau data is an add-on. And you do a digital documentation instantaneously, give a request for, get your NASH mandate registered, give a request for disbursement happens, absolutely no intervention that somebody has to sanction a loan, somebody has to do it. You can do it yourself kind of a thing. So big things are happening in this space. But yeah, coming to the informal segment, which again is very critical because a large part of the country, which is margins of the poverty line, unless they are mainstreamed, will not achieve that developed nation kind of an objective. So here, a lot of experiments are again happening because they don't have GST. Bank statements are still not giving you much insight into what is happening there. Other things are not there. So a lot of experimentations are happening here also. There are NBFCs, there are MFIs who are working in this area, trying to develop some strong tools, surrogate tools, to have a good, clear assessment of the income profile of these businesses. Obviously, the Credit Bureau is helping in a big way. And one more initiative which SIDBI has taken, which I'd like to mention is, so you may be knowing that all the MSMEs are required to get themselves registered. They have a unique business identifier, which is called URC, Udyam Registration Certificate. And for priority sector lending, that URC is mandatory if you want to claim a priority sector lending benefit to MSMEs. But the informal segment, because of various reasons, they are being left out. So we have launched this program in partnership with MSMEs, MSME program in partnership with SIDBI, so to say. This is called Udyam Assist. You must have heard about it. This was launched in January last year. And why assist? Because the MFIs, the NBFCs, or the banks who have lent to this informal sector micro enterprises, through their help, all these enterprises can be onboarded and they could be given their first digital footprint by way of a Udyam registration number. And happy to share that we have crossed the figure of 1 crore in just less than a year. So when we talk about number of informal enterprises, we still have some old MSME census whose data is being reported. After that, the trading has been included in the MSME, but we don't know how many MSMEs are there still, and in what segment, what category, what are their problems. There's a huge database which is being built up. And my request to all the NBFCs, MFIs are still not completely into it. Perhaps the incentive structure for them is lacking because they anyway get the priority sector benefit. So NBFCs and banks are actually contributing to it. And another problem with MFIs is that it requires Aadhaar for unique identification, and the MFIs are not allowed to collect Aadhaar, many of them. Now the thing has changed. But there's a process through which you can upload your data, and then individually, through your field meetings and all, you can do the Aadhaar seeding with the help of the customer. So this gets done. They get a Udyam registration certificate. All the informal segment will, actually the dream is to get them formalized. We should have an exact number of how many enterprises are there, how many are dying, how many are getting closed, how many are getting created, which segment, which sectors. All the policy which is currently being made is based on some random data. It will be a huge, huge push and fillip to this sector.
So that is really heartening to know that we'll have some kind of real-time data on visibility into the MSME sector. I'll come back to Vinay. From the beginning when you were talking, financial inclusion has been a bank-led, starting from State Bank and then the nationalization and so on. And now we see a lot of new non-bank players which are also entering into the fray, and especially in the lending fray. So there is this concern that the new players would be again targeting the same set of customers and leaving the responsibility back on of financial inclusion in the harder to reach geographies and segments, again back on the PSUs and so on. So my question to you is that, is universal financial inclusion a profitable proposition? Or is there still a space for government to be giving segments, for government to be giving some subsidies, direct, indirect?
Thank you, Sumita. Quite a few questions in that, but
Yes.
then I'll take them one by one. Profitable proposition, one line, one word, yes. In the sense that I think I would take a thread from Professor Prahlad's fortune at the bottom of the pyramid, but I would not really call it a fortune. I would say that one strand I would take from his book is that enriching lives at the last mile, while not allowing that to be a burden on this organization. I think I would leave it at that. I wouldn't really call it a profitable version, but then it's fine. It's not getting to be a burden. And then I think the Jan Dhan accounts, if we see, have proved themselves very fast that it's not a loss-making proposition, definitely. I mean, today we talk about average balances of around 4,000 rupees each, right? We started with zero balances. Today we have an average balance of 4,092 as at end of November, which is not bad at all. Now, see, this could be seen as a low-cost resource. And if you look at who all is winning in this, beneficiaries definitely, and whoever are the service providers, be they banks or be they any other type of institutions. Yes, you talk about the new players, apart from the legacy, all of them are winning. Plus, eventually, if you look at it, the economy also wins, right? The nation wins. I think we also owe it to the nation to be part of this whole thing. Whoever is here in this August gathering today, here in this room, I think we all owe it to the nation. So I would not always look at it as a profitable proposition. This is number one. Number two, if you were also asking me if I feel that eventually the creamy layer of even this will go to the fintechs, I don't see it as any anxiety. I would always think that if at all it's a responsibility for us, it's a welcome responsibility. I'm quite fine in taking this. We have been doing this for ages. But there is space for everyone. And the legacy players and the new fintechs, if you may put them into different categories, I think we have to work on the synergies. We are good at a few things. The fintechs are good at a few things. If we can collaborate and bring out the synergies, I think nothing like it. And again, I repeat, we owe it to the nation for this. There's still a lot to be done. Lots has happened, lots to be done. So I leave it here. If time permits, I'll come back later.
Okay. No, I think we're running a little bit out of time. But I wanted to talk to Krishna about, talking about the adoption of insurance and pension, which also Secretary Woodruff was talking about, is that there's a lot more that needs to be done. So again, is there a low-cost provision and which is sustainable for providers is the question for these kind of higher-end financial services?
Um, Thanks, Sumita. So, if you actually look at, we have already a low-cost proposition which, Pradhan Mantri Jeevan Jyoti Bima Yojana or Suraksha Bima Yojana has given Ayushman Bharat, with I think even Prakash ji alluded to. So we have affordable schemes which been run. The way we look at from, let me address it from both sides, supply and demand side. So if you look at from insurer's perspective, while we are part of that ecosystem where we are extending these products to our customers, there is clearly one that there is mortality risk in the low-income EWS segment, very clearly. Morbidity issues are there. So how do we give confidence to the manufacturers that these products are priced accurately? So one of the important things that perhaps the banking and the financial services can play is the areas that Hemlata alluded to on the climate side. The risk that this segment carries is, one is the catastrophic risk, which actually makes them, their livelihood is disrupted and they're just not able to manage their things, right? So that's one big risk. How do you price for it, right? So what else can be looked at, right? The basic hygiene, for example. One of the reasons why mortality or morbidity is high is because of hygiene not in place, right? So there are projects which, impact projects, which a lot of players have taken up. And once these three come together, right, the supply side issue in terms of pricing can be addressed, and there can be more products which can be brought out to the customer. On the demand side, these customers have gone through a lot of pain. We've seen innumerable incidents of whether it is a flood or whether it is some kind of illness that has struck in the village. And they've realized the pain of it, but they've not been educated of what the benefits are. So these are pure risk products. And once the awareness level goes up and there's a larger uptake of these products from customers, the pricing again can come down. So it's basically still a chicken and egg story, chicken and egg issue, but both the sides, right, as financial institutions, as insurance companies, both have to play a larger role in bringing that ecosystem up and running in terms of creating that hygiene, creating those specific risks that I just alluded to be priced correctly, the data flow going to the insurers so they can price the risk or even get reinsured so that they get a better pricing benefit. And that then can be surely passed on to the customers. So yes, I think with the Pradhan Mantri programs, the tone is set. The benefits need to be articulated more clearly to these customers, and then it's once they see the benefit coming in, they'll surely will have a higher uptake, and with higher uptake, the pricing has to come down, right? That's so it's a mix of how do we build the entire social fabric around creating the right hygiene, giving them the right infra, addressing the catastrophic risk. If these can be addressed, the chances of getting this pricing down is very high, and it has to be an industry agenda to take it to that level. Thank you.
Okay, thank you. So we have a reminder about the time, the session here. So I'll just ask my last question from Hemlata. Since all that financial inclusion is about eventually financial well-being, right, of the individual, of the household, of the village, and so on. So we have farmers as well as very small enterprises where their financial lives are intertwined. Like you don't have a division between your salary and the money that you're getting and the money that you're spending. It's all mixed up. So if we are looking ahead to see how do we measure the outcome of progress? I mean, we feel that it's should go beyond just mere credit dispersal. You're talking about measuring an impact. SIDBI is measuring impact. So what would you put down as our measures of progress going ahead?
Sure. Thank you. I think financial inclusion and well-being can be measured in three aspects. I mean, I think one is, of course, access to finance. But secondly, most critically, is usage of that finance. We've heard so much about Jan Dhan accounts being opened and not used, right? And the third most important is also the quality of the services delivered and the quality of the products, right? All these three are important measures of financial inclusion and well-being. And how do we measure it, right? Credit dispersal is one aspect, but there are so many other things that we could look at, right? And one of them really for me is very critical is, and we just spoke about insurance, right? The penetration of life insurance and health insurance, and probably also climate insurance, because that's having, all of this will have an impact on the people and the well-being, right? The other one is, of course, access to bank's account, but more importantly, usage of bank accounts. Maybe something like what are the transactions per month or the transactions per day, you know, what is the turnaround, average balances. I think those kind of measures are very important. On a more general this thing, I think dependence on formal financiers versus, so many people accessing finance from the informal sector, right? That the dependence on the formal financing is a good indicator. So we should have a measure, if you're able to measure how many people do have that access, that's also an indicator of progress. Of course, you cannot measure any kind of financial access or well-being without digital access to digital literacy, financial literacy. I think all of these are very critical measures, right? I think literacy is very important. How much awareness do the customers really have of what they are taking? Are they aware of the interest rates? Are they aware of the terms? I think this literacy is a very important aspect, you know. On a general overall level, I think we've heard a lot of this from morning, is not just finance, but you know, the ability to move up the financial chain, right? So one of the critical factors, I think, is the ability, and microfinance has been so successful, whether it is through the MFIs and the JLG model or the SHG model. But we've still not seeing much of graduation of these women from the microfinance to micro enterprise loans. And clearly there is a huge potential of micro enterprises. Like again, as you mentioned, within a year, if you're able to register 1 crore of micro enterprises, I think there is a lot more lying latently there which can be developed. And I think this graduation of the women from the SHG umbrella into individual loans is very critical. We at IFC are working along with NRLM to link banks to this, to use the data. Again, in the morning we heard there is so much of data lying within the NRLM, to use that data to be able to progress these women from just microfinance loans to micro enterprise individual loans, to help them to scale up their businesses, right? I mean, just to end, I would say it's not just measuring the financial inclusion and well-being, but I think, Mr. Prakash again said, it's measuring the impact. What is the impact that this financial inclusion is having on human capital? What is it having on more investment being attracted to the sector? How is it improving productivity? I think these kind of impact measures will tell the true story of financial inclusion.
Thank you so much. So just to closing remarks from all the panelists, please, on where do you see this? Where do you see us headed as a nation as far as financial inclusion is concerned?
Absolutely on the right track. And as I mentioned, we eventually would need, though there is a lot of progress on digital, I think I would like it ideally to be human touch in a digital world. I think this is what is essential to take things forward.
To get that balance right of digital.
Yeah, balance has to be right. And we now have so many access points. So that's how I don't always move fully to the digital. I would always love to have that human touch, what I call the human touch in the digital world. So that's essential to take things forward, because there are a lot of things otherwise also involved. I'm not at all talking about the cyber race or otherwise here.
As rightly said by Mr. Tonse, said very clearly, it's a high touch and a high tech model that is evolving with such an amazing digital infra that has been created by government. And we strongly believe that we're going to catapult into a different sphere the way we are heading. As I said, the inflection point being the way Jandan was driven, and from there on we should be able to take off to the next level in terms of reaching out to the last mile, reaching out to the LIG, EWS segment to see if they can be upgraded And there's a lot of initiatives that we've heard from morning to now. So I think it's very positive, and hopefully we'll see more sophisticated products that can be brought down to the last mile, beyond just microfinance or unsecured loans that they have access to. That's a bit from my end.
I think it's very difficult to say anything different on this topic. But I think, yeah, two things from my perspective. One is financial inclusion, not just in terms of access to credit, but I think the diversification in terms of access to other products like insurance, but also more importantly, investment products, right? I think that's one critical aspect. And the other, of course, is the phygital model, because, you know, it's impossible to give credit or financial access. It's easy to probably give away money, but to get it back is impossible. So you need that human physical touch. I think a combination of, you know, this whole phygital model with diversification of the actual products that reach the end is the direction in which we should be looking.
Yeah, thanks. I think two things. The first one is around, obviously, customer protection. I think it's about how do you do the building of trust in the ecosystem, which starts from communication all the way down to how transactions are done and how we are able to make the transactions safe and secure for the consumers to utilize that. I think that's going to be a big focus as we see it, as we go along from here. And I'm glad that all the stakeholders, agencies are now thinking about this in a bigger way, from the regulator to the policymakers to the other stakeholders, and the industry themselves are looking at this stuff. So I think there is a big push there, and I think that push will continue. At least it should continue if it's not happening, and so that's one. I think the other thing around, as you know, everybody else is talking about the data and how do you capture all the data for people who have no file or have thin files. I think that is a journey which we've all started on, but related to that is another thing that I think we need to do as an industry is unlock capital. So there needs to be a lot more unlocking of capital for not just for smaller institutions who are sharp and nimble and innovative and flexible to come in and do stuff and be sustainable, but also for unlocking capital for all those other people to lend onwards, which otherwise, if you have the data and no cash to lend, it's not going to work, right? So how do you need to do that unlocking of the capital from the back end to allow that to happen and the funds to flow to the last mile? I think those are the two things I'd bet on, and on how things are emerging in the space.
I think we are on the cusp of revolution. The India stack, which is being built over last so many years. Obviously, there's identity rail, there's a payment rail, there's a data sharing rail. I think most of it has started delivering now. Account aggregator framework also has become very, very effective. Still a long way to go. So again, the two segments I talked about, the formal micro enterprises, I don't see any challenge. In fact, when I interact with my team, I said 5 years down the line, you won't have to sanction any loan. What will you do? Start thinking. All the loans will be sanctioned by machine, approvals will be done by machines, documentation, disbursement, everything will be done by machine. So what will be your new role in that scenario? Start thinking about it. Informal segment is a huge space which needs to be cracked. A lot of things are happening. The formalization will certainly help. A lot of models are being built. Again, the benefit that we have is over the year, we have built a huge credit bureau track record of microfinance. In the credit bureau space, I think India is one of the leading countries in the world. I've not seen many countries with that kind of rich data which is available of the credit history, which can be leveraged for providing loans. So all in all, I think there's a huge credit gap. Perhaps if you look at the number, we are catering to 1/3 of the total credit demand which is there. I see next 5 years, this gap will get bridged. So everybody has enough to do. There's no fear of any competition. That's how I look at it. Each and every player will have a role to play. And I mean, we'll see this getting filled up. And the last thing about the cost is that my belief is that, I mean, out of all the financial inclusion pieces, a saving account and an insurance and a pension and of course a credit, the credit is the most profitable thing because it brings money into the whole thing. So if you drive on the credit channel, obviously if you start disbursing credit in those Jan Dhan accounts, the usage of Jan Dhan account will go up. If you start delivering credit through UPI, the usage of UPI will go up. If you link credit to, you understand that climate insurance is an important piece for credit risk management, or health insurance is also an important piece. Currently, we only understand the credit life insurance because the person dies, my loan should come back. But once we start looking at all these pieces of insurance, those will get a push. So everything is actually, if you drive credit as a piece, then I think financial inclusion overall will also get a fillip. So I see a great future in the next 5 years on this, in this space.
Okay, thank you all so much. I think we have 5 minutes, according to the time, for questions and answers from the audience. Can't see anything into the audience. Okay, these lights are blinding us. We can't see much in the future, but anybody has any questions?
We don't have any. We need to close.
None? Okay. Okay, so we're running out of time looking into the future.
only question would be when is lunch, maybe.
Okay,
But one thought I would like to leave here is that crystal ball gazing, as we say today, the life of a futurist isn't easy at all, because every second day there is a new thing coming in whatever area and field. So one thought I would leave here with everyone is that, fine, we try to predict the future as an organization, as our own organizations, but how do we prepare towards what we predict could happen? I'll give you an example. Suppose in 2018, someone had said that COVID would come. Even if I believed him, what would I have done? And that's the question, I think. What do we do actually after predicting or looking into the crystal ball? So I think this is a thought I would like to leave with, because I see this gathering as a very, very responsible gathering today. I mean, we have the entire financial inclusion in our hands. So it's an exciting thought for me. Thank you, Sumita. Thanks to all the panelists also.
Thank you, everyone, for being here. Thank you.
Thank you to all the esteemed panelists and the moderator for this session for the deft moderation. We, of course, have a small memento for the speakers as a token of our appreciation for their time and their inputs. May I request the team to please hand them over as they leave the stage. May I request you all to please join us back in the audience, and please do carry the memento as you descend from the stage. We now move on to the next plenary of the summit, entitled Cruising on Digital Expressways, Leveraging the IAM Trinity for True Inclusion. This fireside chat will identify key strategies of leading banks for financial inclusion and deliberate on the role of technology in inclusion, considering there are continued barriers to digital capability among the last mile segments. After that photo op, we would very quickly invite the esteemed moderator as well as the speaker for this fireside chat. But before that, we would like to once again remind you all to please do collect your M badges from the registration counter outside in case you haven't done so. Once again, to remind you all, this year we have introduced a web app. Please scan the QR code. The QR code has been shared earlier with you also. We are once again sharing it with you on screens now. Please scan the QR code to view the program. If you would like to see the schedule, the network with delegates to take part in the polls. We do have some poll questions. And of course, we would like to get your valuable feedback. And once again, a gentle reminder, if you haven't collected your M badge and your kits, please do go ahead, register yourselves at the registration counter outside. Please do collect the badges.